this session. Uh, we have some participants yet joining in, so we'll give another minute and we'll start the session thereafter. Jayanthi, over to you. We can start now and we will start the recording of the session as well. Thank you.
Thank you, Satish. Good evening, everyone, and welcome to today's webinar on navigating SEBI's compliance on BRSR disclosures with digitalization of ESG metrics. Before we start, just a quick reminders to all. If you are facing any difficulties, do put out on chat with respect to the Q&As if you have any difficulty joining in the webinar. And this, for your information, we would be recording this webinar, which will be available at a later event following this event as such. We would also request you to put up your questions in the chat box. If you would like to specify addressing to a specific speaker, please do mention it. We would take it up at the end of this webinar session. We would address the maximum questions possible as such. So in today's session, we will begin with introductions of our esteemed speakers, followed by an overview of SEBI's various ESG-related reforms. We will then delve into updates and perspectives on SEBI's circular regarding the BRSR core and value chain disclosures. And we would be culminating in an engaging panel, a discussion on the key challenges associated with these critical topics as such. On behalf of Protiviti and Snowkap, I extend a warm welcome to all the speakers joining us today. We have today with us Dr. Harish Ahuja. Dr. Harish Ahuja, who is the Head of Sustainability, Product and Strategy Development, Power and Carbon Markets at the National Stock Exchange. With 25 years of experience spanning across energy markets and infrastructure finance, he has served in key government roles, including Ministry of Power, Government of India, and he has also ventured into entrepreneurship as the founder of India's first solar e-commerce marketplace, which is India Go Solar. We also have today with us Anjani Agrawal, who is independent director on the boards of leading companies such as Ultratech Cement, Hindalco, Vodafone Idea, Welspun, Imami, etc. With over 40 plus years of experience, which include 20 plus of years as partner at EY. He specializes in business consulting, risk management, performance improvement, and environment sustainability and governance as well. We also have Vishal, Anjani Agrawal will be our moderator for today's panel discussion as such. We have Vishal Bhavsar, who is a sustainability professional with 20 plus years of diverse consulting and corporate experience, who currently serves as a head of ESG at Multiples Alternative Asset Management. He specializes in integrating sustainability into business decision making and has worked with organizations like EY, Tata, Mahindra, and Aditya Birla Group. Vishal has also contributed to the global climate initiatives as a catalyst with MIT Climate Collab and as an expert for the UNFCCC on climate change projects. We also have today with us Rajesh, who is the CEO and co-founder of Snowkap, where he leads an ESG and GHG platform solutions company, serving Indian and global organizations across sectors like FMCG, automotive, retails, BFSI, logistics, and more. Snowkap is also a preferred partner at Protiviti. Rajesh has been also a technology entrepreneur with over 20 years of experience. He's the founder of the organization PowerWeave, a 2,000 plus employee enterprise SaaS company in procurement, supply chain, and B2B commerce. He's also an investor and co-founder of Treaties, a startup delivering GIS-based solutions for ecosystem restoration, enabling farmers to monetize microcarbon credits as such. Myself, Jayanthi, a sustainability profession with nearly 20 years of experience in consulting and entrepreneurship, currently serving as Senior Director at Protiviti, where I've established and lead the firm's sustainability and ESG solutions as such. Moving forward into the specific our session as such, we would like to start here is that SEBI has published various discussion papers, circulars across various ESG related reforms, right, starting from the sustainability disclosures of BRSR, things like ESG investing principles, green bonds, transition bonds, greenwashing, and as well as ESG rating providers as well. So this actually shows how consistent and how SEBI has been moving forward in their focus with respect to ESG for the listed entities as such in India. In specific to the overall, BRSR reporting, there is business responsibility and sustainability reporting. The overall timeline, it started way beyond from a voluntary disclosure in 2021-22 and made mandated from 22-23. There have been various updates on this BRSR reporting across the last 2 to 3 years, and the latest being at in the last couple of months in last year in November and December. In December, SEBI has issued a circular to facilitate ease of doing business and to bring about standardization and implementation in the industry standards for reporting the BRSR core as such. So we will discuss this in detail, this circular in the last couple of months that has come in. For the participants who are completely new to BRSR reporting, we would like to highlight the key features of the entire BRSR reporting, where BRSR core is a definition to be very specifically understood, and there is a new format of the BRSR as well, which came in last year. And there are two more couple of aspects very important which we will be discussing today is the BRSR disclosures for the value chain partners and as well as the assurance requirement for the BRSR core, which has been the major. If you look at these last two elements are the major updates in the circular that has come up. We will see now what are the details here, for which we for the participants who are new again to the BRSR core need to understand these. What does BRSR core mean? This is completely a set of 9 key identified KPIs which have been identified as attributes, where out of the 9, 4 are environmental KPIs with respect to greenhouse gas emissions, water footprint, energy footprint, as well as circularity specific. And there are 3 social KPIs, which include enhancing employee well-being and safety, inclusive development, and as well as gender diversity in business. And there are also a couple of governance specific KPIs, which include fairness in engaging with customers and suppliers, where it touches upon data security, privacy aspect as such, and as well as openness of business as such as a governance KPI. So these are the 9 key elements that add to the BRSR core. Before we delve into the details of this updated circular, we would like to have a poll question to all the participants. Please do provide answers, and there will be choice of even multiple answers to be chosen here. So first thing we would like to hear from you are what are the key challenges that you in your organization face with respect to your BRSR reporting as such? Whether it is right from starting from data collection, where there is a lot of qualitative and quantitative data that needs to be collected from a BRSR perspective. Whether second option B being the accuracy of the data and validating the data itself. The third one, reporting framework alignment with other ESG disclosures that your organization looks at. How do you align it with the various international support sustainability reporting frameworks as such, and overall the auditability of these various data points as such. Give it a few seconds as we are seeing the answers. A kind request for all the audience to participate. I think, yes, we are able to see the results out there. Of course, the data accuracy and validation seems to be the key challenge in itself as such. Moving, we are putting up another poll question as well. With respect to the value chain partners, ESG disclosures, which we just spoke about, we would like to hear from you. Are you currently collecting this ESG related information from your value chain partners, and you're reporting them at your BRSR? So what is the status presently from your end? Whether you've already started it? No, you've not started it. Are you planning to start it, say by this year, or the option being, are you deferring it by a year? Thank you for the answers. As we see that most of them are planning to start this year, and the remaining, yes, there has been I would say yes or no has been almost a 50-50 with the answers that we have received as such. Thank you. Let's move into the details of the specific to the circular. Uh, the SEBI, with respect to the circular in December, there's two parts. One is the major circular on the ease of doing business. Here, they have actually called out the BRSR course reporting standard specific, where the listed entities shall follow the industry standards with respect to ASSOCHAM, FICCI, and CII. They've come up with a specific requirement on each and every attribute, how those calculations and what parameters needs to be considered while calculating those specificity. And this is to ensure overall disclosure of the BRSR core itself complies with the SEBI's requirement. So they've carved out an entire standards, and here the applicability is from 24-25, which is the current year, how this BRSR core needs to be disclosed and calculated as per the industry standards. The intention being ideally more from a consistent implementation of the BRSR core across the listed entities. The second part is they've also published an inter alia approvals over the SEBI's board meeting with respect to the various elements of this BRSR disclosure. We'll see each one. The first one being in specific to ease of doing business, they have actually deferred the ESG disclosures for the value chain partners. We will see the exact years in the coming slides. And with respect to the ESG disclosures for value chain also, they have called it out, it shall be voluntary instead of the present requirement of comply and explain. The third one being they've reduced the scope of value chain coverage. We will see that in detail as well. And as well, they've called out that the reporting previous year's numbers shall be voluntary if in case the company is starting their first year of reporting the ESG disclosures. And then they've also introduced a leadership indicator at Principle 6 for disclosing the green credits generated and procured. They've also substituted the word assurance with assessment or assurance, which is another key change that has been brought. And they have in the process of a standard that would be developed and published to call out what assessment would mean. And the last one being the assessment will be carried out by a third party assessor as per the industry standards foundation in consultation with SEBI. And the applicability of the same for to the listed entities starts from 24-25, and for the value chain partners it will start from 26-27 as such. So these are the major updates in the approvals that has come into picture. So just to summarize this applicability per se, the BRSR core and its assessment or assurance applicability, the top 1,000 listed companies, they continue to report the BRSR core as per the industry standards publication. However, the assessment or assurance for this BRSR core of these 9 attributes will start from the current year for the listed entities as such. And the second part of it, which is the value chain partners applicability on the BRSR, there are 2 parts now provided here. One is the ESG disclosures for the value chain partners, which is deferred, has been called out that it shall be still voluntary instead of comply and explain, which was published in 2023. However, the same has to be taking an assurance or an assessment from financial year 26-27. So this is how we can interpret it. And the second part is the major is the scope of the value chain partners in itself, where the value chain partners scope previously it was to cover all the 75% of his purchase and sales. But however, now presently what is the change is the scope of the value chain partners to cover both upstream and the downstream partners, individually comprising 2% or more of their purchase and sales by value, respectively. While the upper cap for this, while providing this, may limit to up to 75% of its purchase and sales. So that's a big, huge difference from the last circular to this update. I hope this brings some clarity with respect to the value chain partners disclosure as such. Before we move on to the specificity, I would like to take the third question with respect to the your input. What is the biggest challenge in gathering the value chain disclosures for BRSR in itself? I'm sure there is a lot of challenges here, and that's what SEBI has heard and also brought about certain deferment as such. Whether it is the lack of partner awareness in itself, or the second choice being difficulty in the data collection and inconsistent data formats, data validation and credibility as such. And do you all see a reluctance to share information from the value chain partners in itself? I think we see here is, of course, the point B, which is difficulty in data collection and inconsistent data formats. We will speak about it more during the panel discussions per se. So we would like to hear again come to put specificities with respect to Protiviti's partnership. Protiviti is partnered with Snowkap, with providing a ESG data digital solution as such. Yeah, sorry. ESG solution as such, which is this solution provides to create and develop various sustainability reporting and as well as specific to BRSR reporting as such. I would take the last question before I hand it over on the panel discussion. Are you currently using any digital solutions for ESG or BRSR reporting? Would be glad to hear from you all before we start the panel discussion as such. As we speak, welcome Dr. Harish Ahuja.
Hi. Extremely sorry for delay because there was a very important event happening.
No worries.
Within the NSE and senior SEBI officials and very senior people had come, so I had to attend them. I'm really sorry for this delay. Thank you very much.
Thank you, sir. No worries. Thank you for joining. Thank you for all your response. We see that the answer is mostly a no. Still, there is a 50% of yes or no questions as such. So we will proceed from here with respect to specific to the panel discussion per se. I would hand it over to Mr. Anjani Agrawal to take it from here on the panel discussion as such. So you're on mute, sir.
Okay. Thanks, Jayanthi. So, welcome, ladies and gentlemen. We have a fabulous panel today, and we have a very interesting topic. As we all know, sustainability is core to the health of the planet, for well-being of society and humanity, as well as resilience of businesses for creating long-term value. And rightfully so, India is a signatory to the SDGs. India is also adds its own nationally determined contributions, and business has to be an important part of it, being a key stakeholder and an enabler of success in the journey. As expected, there are regulators who are globally active and leading this change and initiative. And so is our SEBI, who have time to time have mandated, put out circulars and guidelines, etc. So and frameworks. There is a plethora of frameworks globally available, but good that we have BRSR framework for reporting right now. And as we move forward, the assurance piece will also come up strongly. So there is a lot of value for businesses, and we heard from Jayanthi how there has been some recent changes. I think SEBI has ears to the ground, and there is a feedback from the businesses and associations as to what's the challenge being faced by businesses, particularly in the value chain reporting. And so we have seen some deferment of time. But in that context, let me first bring in Dr. Ahuja. SEBI has very recently come up with circulars which sort of gives some leeway to reporting, deferment by for reporting as well as assessments. So do you think these deferment timelines, will the companies slow down? Because we globally we see mixed reactions, Trump or otherwise. But here in India, do you think companies will slow down and wait, or leading companies will continue to press ahead with their initiatives on the ESG front and continue to even voluntarily, wherever there is a it's allowed to voluntarily report, will continue to stay ahead? Over to you, Dr. Ahuja.
Thank you very much. First of all, on behalf of NSE, I sincerely appreciate this opportunity given to us by Protiviti. This question by Mr. Agrawal, I think, Mr. Agrawal, this would have a mixed reaction. I don't believe that this will slow down the process. I think, take the example, I'll take the example of NSE. NSE is not a listed company, but in spite of that, being a leading exchange, we had taken voluntarily on us to comply with BRSR, BRSR Core, and BRS Assurance. So I think there are many companies which would not be impacted directly by this decision of SEBI in terms of going voluntary or delaying the assurance to assessment. They will take on voluntarily, and I think they will submit their be it assurance report or be it their BRSR report or value chain reporting well on time. So to answer your question, it will be a mixed reaction. I'm not sure the good companies will comply even without any compulsion, but I think some companies which are already doing it voluntarily will keep doing it. Some companies which are have problem of resources or shortage of you can say manpower or overall understanding of the sector, they will take this time as a to prepare themselves with better preparation with better resources. So this is my first take on this question.
Right, absolutely. And in many ways, as we see, Indian businesses are getting into, are increasingly part of global value chains. And wherever there are reporting requirements from the EU or the US, I think in any case, they have to get prepared, be it carbon tax or otherwise. So a major part of our industry is already sort of responsible and accountable to their global counterparts for being part of the value chain to anyway get up to speed on this. And I'm sure, as you said, leading companies are not going to sort of slow down their
Just
effort.
like to add one important point. I think when particularly when NSE see this BRSR reporting, we don't see it in isolation. You have to see it in a part of a trinity. Trinity means India's net zero energy transition, India's commitment towards social development, and then ESG practices. So these are three trinity. One definitely net zero transition, then ESG practices, and social development.
Right.
And I think if you connect these dots, if you connect this trinity, uh, be SEBI or no SEBI, you are, voluntarily committing to this bigger cause of climate change and, net zero transition or social development. I think the Tatas of the world don't need any BRSR, to comply with the good practices. I think it is already in place. But SEBI, given a guided path approach, I think they put a particular framework, a structure that how exactly big companies starting from 150 company will go for assurance to 250, then 500, then 1,000. I think good companies will surely comply, like you said, be it under compulsion of their own goodness, or because of the compulsion of regulations, or because they understand this trinity part very well.
Well said. Well said. Tell me, Dr. Ahuja, will companies, are they just using this BRSR to sort of compliance, or they're also starting to see this as providing insights and also help them better their ESG performance? Because what gets measured gets done, and this is a great opportunity to also to be able to compare benchmark with similar ESG performances across in the same industry or otherwise. So what are you hearing? Because most of the all the large companies are listed with you. What are you picking up in terms of their expectations, aspiration? How are they going to use this? Only as a compliance or as also a tool to improve their ESG performance and derive tangible benefits?
That's a great question. Trust me, first and foremost, no company treated as a, and I'd say good company. I'm as well listed corporates which are into this 1,000 company bracket, which are complying with this regulation since 2012 onwards, and then 2020 onwards on BRSR. They treat it as a very important tool of their integrated reporting, and I think they go beyond the reporting aspect. What you're asking me, they go point by point. I'm talking about from GHG emissions to energy consumption to gender equality to best practices to labor practices. I think every good company, and this not I'm saying hearsay, I attend many conferences, I see many reportings. Whenever I meet the chief sustainability officer or sustainability officer of any company, they go beyond the reporting is just a document for them, but I think they have gone quite deeper. And this is a good thing which has started now. In fact, again, I will give the example of NSE, because quoting other example would also be good, but let me give the example of ours. NSE, in terms of gender ratio, is around 36%. We have got 36% female participation. But when we saw the salary, the median of the salary, in fact, it was highly in the favor of the male side. It was around, so there was a 27% female were trying to, the median was in the favor of male. So what we did, in fact, we decided all the female which are below median, for that particular bracket, be it AGM or CM or manager or deputy manager, can we bring in next 3 years to them to the median, So this is coming because we do reporting all this data, This is one example. Similarly, plastic waste, we realize that plastic waste being collected by MNRE or Environment Department certified companies. But what is the end use of that plastic waste? Are they just collecting and giving 100% waste utilization, or they're putting in a places or in a circular economy where we can say they are using the plastic waste for the betterment, So again, we use this. So I think similarly for GHG emissions, see, we are on 16% kind of consumption coming from renewables. We exactly know that we need this much units, this many megawatts, and this will come from the solar or wind or a combination of tree plantation. So I think every good company is going minutely into all this core data, and then trying to see which aspect they can capture immediately. There are some low-hanging fruits. There are some high-hanging fruits. I think low-hanging fruits, most of the companies are looking to, and they are using this strategic insight for betterment of their entire ESG aspect.
Yeah, absolutely. This can really be it's like holding the mirror onto yourself and see how are we compared to others, and what's the journey, what's the goal target, and what's our responsibility to the nation in terms of helping the nation meet at the indices as well as our own competitiveness. So let me turn to Vishal. So Vishal, you have been a practitioner of sustainability, and you worked with three very large corporate groups before your current position as a asset manager. And as you know, as a financial intermediary, you have a great responsibility to channel the financial flows, not only to transition as well as to end object. So how do you see ESG as an integral sort of into your investment strategy, and how are you using currently the ESG data, and where do you think the frameworks in terms of how are they helping you take your decisions?
Thank you, Anjani, and thank you, Protiviti, to having me here. I'll just have a quick summary of my current role. So I head ESG for a private equity firm, Multiples. It's a 15-year-old firm operating into Indian market. So Multiples is focusing in Indian market, channelizing funds which we're able to raise globally, and then work with different entrepreneurs and get a lot of businesses get built for future. That's the whole objective, and my role is to integrate ESG as part of the entire investment cycle. So responsible investment, Anjani, has been the core pillar of Multiples right from the inception while we have started investing. And how this has got evolved is, initially it was more in terms of getting ESG considered while a deal is getting evaluated, to a more mature platform. We have created a framework which is called as ESMS, and this has been used to evaluate different kind of risk depending on which sector we are investing. We look at materiality of the sector, we look at what kind of environment or social issues are relevant for this particular business in which we will invest, and whether ESG is more of a risk for that business. There are cases where ESG could be risk, but there are a lot of cases which are coming up where ESG is also coming up as opportunity. One good example I'll give you is we invested into a business of Murgappa Group, which is electric vehicle, commercial electric vehicle platform. There ESG is right a big opportunity what we have seen, right? So definitely ESG is the core, one of the core pillars. Of course, for any good investment, we need the business to grow and the returns to be made. Unless returns are made, investors are not going to come up, right? To the second part of your question, we have evolved or developed our own ESG maturity framework.
Okay.
And that whole framework, we try to look each investment, right? From, well, let's say a deal team comes up with a business, we look at risk, as I told you, but we also look at value creation opportunities. And for us to identify value creation opportunities, to identify various themes of ESG which will play out for our investment, the data plays a key role. And there I'll tell you, the data which is getting populated right here through BRSR requirement which SEBI has come up, there's plethora of data. Like, if I'm, let's say, we invest into four broad sectors. We invest into financial services, technology, healthcare, and consumer. And let's say if we are evaluating a financial services firm, now it's very easy for me, at least. Maybe it will not be a private company data, but we know the size of business. We can pick a listed company which is publishing their BRSR data, and we can run through all of the data point from a ESG lens, and then see where is this business standing against those listed peers. So definitely we are using that for that kind of publicly available data from BRSR. Plus, there are a lot of global framework which also gives an opportunity for us to look at. So a lot of Indian firms have been doing disclosure on GRI maybe over last 2 decades. There are disclosures being made to CDP, which is specific on climate. So if we are looking at a business which has impact on climate, then CDP again becomes a good source of data for us. So yes, there are a lot of platforms or links available for us to look at data, and then we have our own methodology carved out in terms of what kind of data we source from. and then use it as part of our decision making. And it goes into, so it will be like a summary being made and presented to the investment committee in terms of these are the risks, these are the opportunity from ESG, and then of course the deal team would and the investment committee would eventually decide whether we go ahead and make an investment or no. But yes, the role of ESG data is much more playing out in our case once we have invested into a business. Because we use that data to identify what are the areas of improvement, what whether a business we need to make an investment into a energy or energy as a area or a social as area. There are businesses where we have to handle companies more on the safety performance because say health and safety becomes a bigger risk. So
Right.
that's the way in which we are currently playing out, Anjani.
But this BRSR data is essentially right now from 1,000 companies. But as a private equity investor, I'm sure many of your investing companies are not there up yet.
Yes.
So do you use a similar framework to get data collected
So
from your investing companies?
So yes,
Or it's
we
different?
no we have our, so I told you that we have our own ESG maturity model.
Okay.
So BRSR currently maybe is collecting almost 250 to 300 data points, like large, and then there are a lot of other data points which lead up to that 200 plus data point.
Right.
What we have looked at is the nature of business in which you're investing or size of business in which you're investing. We are able to narrow down about 60-65 data points which we collect even before investment and throughout the life of investment. And we keep measuring the maturity against those 65 KPI, which we are able to do through a digital platform. In our case, we have implemented a digital platform, and we are progressively moving towards more frequent reporting of portfolio companies, and basis which we can analyze the maturity movement on the ESG performance for each of our businesses.
So this is a wonderful moment to pivot into data and tool and digital. So Rajesh, come in here and tell us about your experience. What do you see as Indian corporates in terms of their readiness, in terms of data collection, reporting? We had those polls, audience polls also, which were reflective of some of the challenges. But come in with your experiences as to what are you seeing and how third-party consultants or providers, enablers like you are helping them out.
Thank you, everyone, and wonderful to see you. I think some of the insights already came, Anjani, through the poll, right? And in the context, especially of, let's say, the new notification, in general, I think the depth of reporting is increasing, as we've seen through the last two cycles. Second, we are seeing, and I think we'll continue to see changes and amendments. So understanding those, digesting those, responding appropriately to those changes, and yet managing them as an ongoing challenge is another issue I think most corporates are dealing with. And there's also now a requirement to go all the way to the supply chain. Okay. I think this necessitates the need for intelligent ways of data collection and the ensuing calculations and metrics that we spoke about in this conversation. All said and done, I think the big issue at the ground level is data collection. And I would add here, Anjani, that the data collection part also has challenges in terms of the roles people play, right? I think a lot of people who are entrusted with collecting data also have other data in jobs. I mean, if you look at procurement, for instance, their job is to find the right vendor at the right price, and they're suddenly thrust into this role of also working on data collection, and very often with poor training or limited understanding as to what is the context. Why am I collecting this data? Is it compliance alone? Is there a business benefit? So I'm just talking about on the ground issues much more than strategic issues. So I think data continues to represent a problem. The other problem with data is that it's often in the way that Dr. Ahuja BRSR is structured, is that it's quite a comprehensive, it's 740 odd data points, and they're spread across HR, finance, business, corporate affairs, compliance, CSR, to name a few of the kind of departments within a company that might need to respond. And then within those departments, data is often not available in one standard format in one document, right? It's probably in a document somewhere, in a database somewhere, in an HR file somewhere. So I think the challenge here is a bit of a Sherlock Holmes challenge. How do you kind of hunt data? Where is it at? How do you ferret it out? How do you collate it? How do you know what you're doing is right? And it might sound like a trivial challenge, but it's actually quite a lot of work because there's also an asynchronicity between when the data got developed and when is it available within the organization for reporting. So I won't overstress the challenge around data gathering, but I would say that that is something universally there, and different companies have hit different approaches to it. And I think, of course, with the new notification, there is a little bit of a breathing space, but not too much. And this is a great opportunity for organizations to kind of move forward and do something really significant about it. I'll just take a moment to also then talk about reporting, because often reporting starts where data collection stops. They almost are like a relay race process. First, collect all of the data, and then now make it available for reporting in either a tool or an Excel sheet. And for all of those of our attendees who've been trying that, I don't want to rub salt into your wounds, but you know how painful that could be, right? Very specific formats, very specific data points. And the last thing is that a lot of this happens also in the context of, Vishal, as you were saying, multi-format reporting. I also have GRI, for instance, to contend with. I may be a vendor to a large European company, and therefore I have some other disclosures to make. So I've got quite a lot of additional reporting burdens. And within that, I've also got BRSR. So, Anjani, my experience is that these are significant challenges at the nitty-gritty level. And that's where I think partners can start. Of course, there are the larger strategic issues, which, as you climb up the organization around planet versus business and so on, we can talk about that later. But I think partners like us, partners like Protiviti, and there are many other good companies can help, first of all, create a systematic, enduring process and bring efficiencies in several ways. I think one of the big opportunities for organizations is to rethink the way in which they organize information, data repositories, so that they're available for easy repeated use. And the other I would say is, you heard Jayanthi speak. There's a lot of insight. I mean, I've been speaking to her over the last 2-3 months on what are the real challenges that organizations face and what are the hacks, what are the kind of process improvements, what are the areas of training that can really change an organization's ability to respond to BRSR. So I think those are my initial thoughts to your question at this point.
Right. So let me extend this to, and this may be, Dr. Ahuja may also like to answer and reflect on, but the question is beyond reporting. So BRSR is all about reporting, but that's the end state, right? Before that, you have goal setting, target setting, you have measures to matters to measure, you have resource planning to make that happen, you have actionables, and then outcomes, and then reporting. So are we seeing efforts being taken and technology as an enabler to support this journey, entire journey? We are yet talked about only reporting, but the action is somewhere else. Reporting is just the end state. So any reflections you have, and maybe Dr. Ahuja, you want to, sort of...
Ahuja, I'll just kick that off and would love to hear your views. But I think a lot of the scene was set in the earlier conversations, right? Let's talk about the bigger picture. At the end of the day, if you zoom out at the planet level and understand what's happening in California today, much as BRSR is respected, it fades into insignificance, right? The conflict between, let's say, what's good for planet and what's good for business is.
No, I understand that. I was just
No,
so I'm just
no.
coming
Let me answer this question.
Okay.
I think we have to be practical also. So let me start, Mr. Patel, here with one very important information. This is not a good news for everyone here. $1.7 trillion investment which were going into ESG related mutual funds or companies has been withdrawn. Vishal must be aware of that,
Yes.
All the top-notch companies which have committed for kind of, net zero or ESG reporting, are compulsory for their portfolio companies like BlackRock or JP Morgan of the world. There was a climate pledge, document they have withdrawn for that. It may be the impact of Trump or compulsion or money is not flowing into that. So let's not talk about that. At this stage, let's talk about where we are in India. You talk about before the outcome, before the processes, before the resources, do have some technology tools, how exactly it works. But I think before the technology, I think we should only talk about people, processes, and strategy, right? Every function is nothing but a combination of these things: strategy, people, and processes. You're talking about strategy, processes, and people. But let me tell you one thing which I noticed in all the good companies or bad companies, whatever. Company secretaries are being given the charge of sustainability officer. And when the company secretaries become the sustainability officer, they treat BRSR reporting just another filing,
Only reporting, only filing.
Exactly, and this is surprising. And this is coming from my experience interaction with many people. If you see the listed companies, in I think less than 20% companies, there are full-time SO, or even, not even SO. Even he must have been given us some additional charges, and he is taking care of SO. More than 70% company secretaries are looking at the charges, filing of the reports, and just change the mindset. The moment a company secretary files, I'm not saying they're not competent company secretary. They're very competent company secretary. They have taken this job so seriously that they're performing much better than so many qualified engineers, qualified security officers. But having said so, I think this shows the attitude of the company. When they treat it like reporting, they give this task to the system company secretary. But when they go beyond reporting, what we're talking here, exactly how is the strategic insight gaining coming through this VRSI reporting? Here comes the major change. Like in NSE, we have a full-fledged chief sustainability officer and this ESG committee, which is headed by the board of directors. And every quarter to quarter, we give the clear submissions to the board of directors, and our direction emanated from the board of directors. So this is the way I think the first people should be in place.
Yeah.
If the people are in place, they will definitely bring the policy, processes and strategy. Now, trust me, we have explored multiple options where we are trying to democratize the entire BSR reporting. There are tools, I'll not name those tools, which will cost me only 7,000 rupees to file the entire reporting, and it will be 2 days work if you got data. I would not say the consultant like Protiviti or other people are doing injustice, but I think the tools are already there. I'll not name those companies. They are
so that's where, Dr. Ahuja, that's where the key question is it all about only reporting?
Yeah.
Because, there is a whole lot of visioning, setting,
exactly. So I'm coming to that only.
Actions.
So
all of it has to be play out well before you get into the
very valid point,
final
Anjani.
outcome.
Very valid point. Are we trying to democratize the reporting or commoditization of the reporting? Or we are trying to use this report as a strategic tool to set the vision of the company?
Absolutely.
I think all the good companies are taking second route.
Yeah.
We'll be using technology. We'll be putting the right people in the processes. But beyond that, this document is nothing but a strategic tool for us to set the vision.
Right.
And I think here comes the technology. I think GRA approached us, ISBS has approached us, all the good companies have approached us with their tools, but they always add the element. Sir, this is nothing but a tool to you. How do you set strategic insight is secondary. Or I would say it's a primary task of us now as a CSO, So coming back to you, technologies are available, tools are available. The cost which normally being charged 10 to 15 lakh rupees per good company can come down to 7,000 to 1 lakh rupees, but that's not the end result. The end result is, can we use the strategic insight for setting up the vision of the company towards net zero or towards being a better company or doing good so that we can do well, so something like that.
Yeah, it's the transition, the intense journey is what matters.
Yes.
And that's where probably, let me ask Rajesh, so, in all this entire journey start to end, do you see a role of analytics and AI or stuff like that? Being a technologist, maybe you could help the audience understand as to how do we get there better? Not only reporting, but achieving our sustainability goals.
Yeah, I mean, I think if you look at just the role of data, and I think Vishal, you referred to that as well, how you use data to connect strategy to action. Let me give you three very quick examples. One, let's say that I'm in procurement and I'm buying from two vendors that my company has worked very hard to qualify. Both vendors are equally good, high quality. One vendor is a little more efficient when it comes to ESG, better labor management, better pay, better gender ratio, and they're lower in carbon emissions. Okay. Technology does simple things like give you access to this information in a believable way for you to make a more sustainable decision, right?
Right.
It need not be fancy. Of course, AI can be used, as you were saying, Dr. Ahuja. The tools are not expensive. It's using the information in there to make decisions. Let me give you a second example, perhaps a little more elevated. And here it's not just about tools, but technology is available. I think a lot of sustainability of the next 10 years will depend upon capital allocation that happens today, right?
Yes.
Vishal, companies like yours are going to invest in either companies that represent an opportunity in ESG or where there is a risk which you can lower. Technology helps you identify those risks and opportunities, but also make realistic investments to leverage and therefore get to those opportunities, whether it's in renewables or water or even social impact. So that's a second example. The third, which I think, Anjani started earlier, is to say target setting. The question is, and Dr. Ahuja, let's assume companies have gone beyond, uh, company secretaries to do more strategic work, with all respect. But the question then comes, how do I make that transition, right? How do I actually deploy my capital to create a return on investment on the one hand and make a ESG impact on the other? Tools are available. I mean, there is the concept of marginal abatement cost.
Yeah.
What is the extra money you would spend for each additional ton of carbon reduction? How does it show up on my balance sheet? How does it show up on my P&L? So, Anjani, there are lots of decision support tools available. Technology sits right at the heart of it. Last very quick nano use of technology. Large GPTs have been created. If you look at most reporting formats, you are required to upload anywhere from 15 to 20 documents. If I have 1,000 suppliers, that's 15,000 documents.
Right.
Can I use AI to quickly analyze those documents, validate them, provide authentication, and a path to improvement? So recommendations also, I think, are an inherent part of what technology can do. Technology can't take action for you, but it can be a big enabling system for those actions.
Absolutely, absolutely. Let me turn to Vishal. I'm sure you map the journey of your investee companies, and as a professional sustainability champion, what's your view as to how these frameworks are going to evolve beyond BRSR? Any reflection that you can provide as to for your audience as to what they can expect in next 5 to 10 years to see the intensity, direction of reporting areas, what SEBI could additionally focus on. Any quick comments on this, please?
So, if you look at a lot of development which are happening outside India and as well as India, like in India, if we see it has evolved from a plain vanilla disclosure of BRR to BRSR, right? Where the first step is all about collecting data. But at least as a sustainable professional, what I foresee is the second level of thing which SEBI and different market regulators would also influence is quality of data.
Sure.
First level is data. There will be tweaks made so that the quality of data is being made available, which is investor grade, right? We have discussed, like Rajesh also made a point that investors need to do efficient capital allocation. That would only start happening if a investor grade data is available where you can compare. So that will be the second way in which the regulation would influence the kind of data which is being
Right.
provided. The third, of course, all of us have discussed, all of this should channelize into a vision of a business. The whole change in data disclosure will make companies look at new business model, which will have lower impact on both environment and
So
society.
let me come here. So all that is great, but I'm saying from yet entire reporting is historic,
Yeah.
the past tense. Are you going to see that reporting frameworks being demanded by regulators or by government? Because our promises are into future.
Yes.
Our indices are future.
Yes.
Our commitments are future.
Yeah.
You know, we are whole interested in our future.
Yeah.
So are you going to see efforts towards more futuristic data being required in terms of what's the plan, how do you get there, what are those risks, what is going to happen, what's the assessment, what's the estimate, things like that. And we have seen examples in the EU and
Yes.
the
Yes.
SEC requirements, which are much far beyond into future.
Yes.
So any quick reflection anyone has,
So
let's spend a minute or two on this subject.
maybe last bit from my side on this is, of course, the transition of ESG data and the conversions of ESG reporting will start happening to a core business reporting. So currently also, if you see, BRSR disclosure is still a standalone section. But what I foresee next to 5 to 10 years, the way global regulations are moving, the way Indian regulators are responding, it will come a stage where it's like a single reporting. So there are no different cash flows and GHG related data or water or social data. All of this will get merged, and companies will have to start quantifying this and putting a value to the environment and social data point, and then come up with one single cash flow, or let's say business reporting, which would start happening maybe 5 or 10 years from now.
Okay.
I would,
Yeah, please.
if Rajesh like to add, then Rajesh should add, then I'll add. Rajesh?
Please go ahead.
Yeah, so I think what you said is futuristic. I think the idea is same only. The idea is let's put kind of companies on a training system, where they're reporting the data. And what Rajesh said very right. In fact, being the head of the sustainability in the company, I know how difficult it is to pull the data and data in a right framework, and then the calculation we are deriving is again correct, appropriate to the BRSR framework, So I think once the companies are in this rigmarole of giving the right data and putting in a structured format and creating a vision framework, that is definitely to create a future blueprint of how exactly this entire thing will align to the SDG goals, or align to our net zero or NDC targets, or for that matter, social development goal. So that's the very idea, I think. When exactly will those ideas be enforceable? I'm just giving an example. One fine day, in fact, I got a call, and it is around 1 a.m. in the morning, and I got a call from a very senior regulatory officer. She asked me, she said, we have been asked to share the data on carbon emission intensity. So I said, what's the problem? She said, India, the kind of development path we are following, we cannot give the trajectory because we ourselves don't know India thermal versus hydro versus renewable mix, how is it going to change, If we
Right.
commit anything, it has a huge implication on the entire NDC target. So I mean, so one carbon emission index being reported at companies connected to global level when we're talking about NDC. So this you have to understand this entire thing is connected, So this
Yeah.
vision will definitely come from top. I'm very happy to share that E aspect of the ESG is being taken very seriously, be it global level also. Though the companies are withdrawing from the ESG investment, but the environment aspect are still being very seriously. G and S in the that order only. So I think E aspect in India also will be seen very seriously. And I think the future vision in terms of putting certain numbers in terms of carbon emission intensity aligned to NDC would be you will be seeing in next 2-3 years. So I think there will be enforceable regulation in place where we'll be asked to meet certain carbon emission index in PPP terms only in coming 2-3 years. So I think this data is going to be nothing but a bedrock of creating some vision and implementing it under the regulatory framework or without it.
Absolutely. I like what you said. I'm very conscious of time. We have a minute to go. So maybe I'm just closing with hopes that all of this data which is being collected, they're being put to good use at the national level. I hopefully there will be someone who will use a platform to put out some analysis, value-added analysis for all beneficiary, all stakeholders like the government and the regulator, and also the companies that are putting out data. So I hope somebody will start that. And as someone said, climate does not care if we believe it's not changing. So but good thing is corporate India is conscious, is taking steps to move in that direction. and it has been a fabulous discussion. Thank you all panelist members, and over to Jayanthi.
Thank you to all the speakers. It was a fantastic discussion. I think we can keep going. It was so interesting to hear you all speak. I think there were few questions, more technical questions from the participants. We will reach out to you with specific answers to you all. And I think there was some very specific question which
I can answer a couple of questions if you want, because I was reading the questions.
Yeah,
You told
please.
me, Jayanthi.
Sure, we can.
Please.
Yeah, quickly I'll answer. I think because the one question is asked very specific to me. So
Yeah.
Manoj is asking this question. Can you read the question of Manoj, Jayanthi, for us?
Yes, I can do
Manoj
that.
Yadav.
Share my screen. Yeah. So he says strategic foresight is not very common in India when it comes to sustainability. And it's somewhat understandable as companies struggle to remain profitable or are in hard to abate sectors like coal, cement, and few other reasons.
So I like to answer this question in a very structured manner. In fact, I was invited in a global conference where this was the very question that how the companies which are into hard to abate, like let's say steel and cement, I'm not talking about coal right now, how
Right.
can they adopt the renewable and still remain the competitive and compete with the China, not Indian companies, you know. And I give a very solid example. I said most of these companies, be it steel, cement, they are using thermal power, and you see their cost, you know. So right now electricity cost, either they're buying from the utilities, let's say discoms, or they're their own capital generation. In both the cases, the kind of carbon tax we have put, the kind of carbon credit price are going to put on this hard to abate sector, virtually buying electricity is going to be very expensive affair. So let me give you an idea. Right now it costs around 4 rupees 80 paisa to 5 rupees 20 paisa to buy a coal unit. You know, why not they convert it into a combo of solar and some open access power from utilities, you know. Now this OPEX item, which is electricity cost in their PNL, when they invest into their own capital generation like solar, you know, or some combo of hydro plus solar, you know, this OPEX becomes the CAPEX. And now in the PNL items, the same thing which was costing them around 5 rupees 40 paisa to 6 rupees, now it has gone down to 3 rupees, and a combo of, you know, some 24/7 power cost around 5 rupees.
Yeah.
So they're saving
On the clock.
1 rupee, straight 1 rupee on per unit. But most important thing is now being a part of CAPEX, this entire expenditure is also attracting depreciation and accelerated depreciation. So they get tax advantage also. So very smartly, they took a line item from PNL, put into the balance sheet, created fixed asset, taking the advance of accelerated depreciation, also taking the tax credit. So I think it becomes more competitive. So I think if they think smartly, becoming green and clean is a profitable tool rather than sustainable. So this is my answer to Manoj.
Yeah. And I'm sure in this journey, organizations like Vishal's will have to come in to fund the transition capex for good. So with that good hope, are there any more questions, or we can
conclude here, actually, considering the time. Thank you all the speakers for a wonderful session today. And I request all the participants to provide your feedback as well, what is shared on the screen. And thank you for your participation as well for this. Hope this session was inspiring and very useful to you all. We would also be taking up this webinar, one more part 2, a session in February 14th. I hope you all will receive we will send the invites to you all. Hope to see you all there on another area of discussion around the BRSR and compliance as such. So thank you very much to each one of you, both speakers and the participants as well. Good day and good evening. Have a great weekend as well.
Thank you. Thank you.
Thank you.
Thanks for being here.
Thank you.
Thank you. Namaskar.